Good morning, everybody. It's Monday morning. It's the 12th of October. We are Signal Centre Talking Ball. I'm Joe Neighbour. I'm joined by Ian Coleman, and welcome back, Steve O'Hare.
Thank you very much. Morning.
How
How's your
are we,
jollies?
gents?
Yeah, all right. It's good. Quite relaxing. Walking along the beach, not thinking about the
Nice.
markets. Then watching the waves coming in sort of like they come in sort of like 5 waves and go back in 2. It's really weird.
Oh, was you studying Elliott wave patterns on the beach formations?
Yeah, it
Charting the
was.
longshore drift,
But I'm
the
sure
erosion patterns.
there's a couple of sort of they look like university students with sort of like big poles measuring stuff and everything. I'm sure they were looking at Fibonacci.
Geography
Yeah.
students on the beach.
Maybe, I don't know.
Brilliant.
But
I'm
yeah,
into all
yeah.
that.
Yeah, and yeah, the waves went out and the waves came back in. It's
Yeah.
great.
So, did you look at anything while you was away? Have you looked at anything since, or are you here for an update as well?
No, I had a little. Well, I mean, sort of little updates that I did see or look at. It seemed like equity markets went up. Is that right, or is that sort of
Yeah, because they think they're about to get pumped full of stimulus.
more money? Right. Okay. Yeah.
So yeah, they're all looking quite nice. We did see. So the latest on the stimulus is that we're expecting to see some more negotiations with a broader package, although that did slow a little bit. The Trump administration continues to call for a stripped-down program to come into effect soon. US futures are pointing to a stronger start today. European markets also set for a stronger start, although look a bit flat as it stands at the moment. More just chat around COVID, to be honest, from the UK stuff, and not sure how that's affecting stuff really at the minute. Not a lot,
And
I would say.
Brexit as well.
Yeah, Brexit. So we've got Boris Johnson set a 15th of October deadline for the outline of the Brexit deal, and that's obviously just a couple of days away. And that was following an intense weekend of diplomacy. The UK Prime Minister told French President Emmanuel Macron on Saturday that Britain remains committed to seeking a pact with the European Union, but that won't be at any cost. So he's got a tough week ahead of him, Boris, with Brexit chats and further restrictions that look set to come in place to the UK today.
It's mainly on fishing rights, isn't it? The Brexit stumble.
That does seem to be the sticking issue, yes. So should we have a look at some markets then?
Yeah.
One market that sort of stood out for me last week was gold.
Yeah. I'm just looking at that
because we've seen this breakout of this sort of consolidation pattern. So we obviously had the strong run up with, that was the stimulus effect really, weakening the dollar. We've seen the dollar correct a little bit and obviously gold correct lower. Within this sort of triangle pattern, it's been pretty choppy, but last week we saw a fairly good breakout above this 1921 level, breaking out of this triangle, this wedge pattern. A little bit of a pullback today, which may attract some interest for another move to the upside. So gold looking pretty strong. Maybe a continuation there, particularly if we are going to get this stimulus package, then that will weaken the US dollar and therefore should strengthen gold. We also saw that on Bitcoin as well, actually. That had a little bit of a jump higher last week. That was one I did the gun to the head trade on, which worked out quite nicely, which we'll come on to later. Although that was 3 o'clock in the morning, it hit target, so didn't quite nail that one. But yeah, it looks pretty good. Silver, similar situation, pushing higher. That's the intraday chart. On the daily chart, we can see a pullback to this trend. Well, you can argue some support around there, a nice hammer candle forming, and then it's just pushed on higher. So I guess we need to wait and see whether or not it's going to get back up to those highs up there, just shy of $30. So yeah, the weakness in the dollar is pushing these assets higher. Ian, what's your take on the dollar? Have you got some charts ready for us on that?
Yeah, I mean, this was sort of prime support down here at 92.89. We've had a gap open overnight, so we did gap up and we've closed that gap. But if we go to these charts, and these are Joe's basket charts, you can see we've actually hit support here pretty perfectly at 168. Blah,
so
blah, 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 blah.
Equally weighted basket of US dollar currencies rather than the weighted basket that you get on the dollar index.
So that for me is quite interesting, hitting that overnight. Like I said, it's doesn't reflect very well on the DXY, but like Joe said, the weighted basket, and even if you're sort of flicking through, these are short time frames, we've just seen these gaps that have opened up on the dollar crosses, and they've just closed those gaps. I wonder if they're going to push through. This could be a wedge euro dollar. I think cable's quite interesting, but not as cable, to be honest. Again, you could probably fudge a wedge out of this somehow, but I think for sterling and sterling crosses, according to the baskets, then it's looking like risk off, so buying safe haven, so buying the dollar, buying yen today, selling sterling, selling CAD is what I've got. So this is quite interesting, sterling yen. So we've just got up to, or got very close to this 50% retracement level of this move, that aggressive move to the downside. And if we go to a shorter time frame, it looks pretty good as a wedge formation, a break of support, which is at 136.78, and the measured move to target is down here. And again, bearish outside candle just off the top. If I put a indicator on here, any of the, that'll do, relative strength twice because it's so good. Let's get rid of one of those. I was going to say we're looking like we've got some decent divergence, but that's class A divergence, not class B divergence, not class A. So this is making the same top when the the chart is making a higher high. The oscillator, easy for me to say this morning, is making the same high. So normally you'd want to see it a bit like that, which would be class A. This is class B divergence, but I still think it's going to work out. So I do believe that we're going to get a bit of a run to safe haven today.
Are you getting a bit mixed up with the type of drugs you're using at the weekend?
Class A and Class B. Only ever Class A. Don't put any rubbish into me.
Pure stuff only.
Yeah, exactly. But the rest of the currency pairs really not got a lot on it. This is euro sterling. This is an extremely complicated chart that we did last week to confuse everybody, and we broke. Actually, we were looking at a triangle formation here, and we broke to the downside, and we've just got close to that 88.6% fib again. So I still think that euro's looking stronger than sterling at the moment, but like I said, I think it's going to be a safe haven play today. So I think it's a case of buying dollars and buying yen, and trying to pick the best cross to do that, basically.
Okay, cool. Steve, have you had enough time to look through any charts to see anything that's interested you today?
No, the only one that really interests me is gold. This is a 4-hour chart, and I've taken a lot of the. It looks a bit noisy, obviously, but I've taken a lot of the noise out because I've taken away the candlesticks and just put a line chart. So this is the closing levels on the 4-hour chart, and obviously this level between 1915 and 1930 is, if I flick to the daily chart. Oh, that's weekly. That's a bit too much. You can see on the daily chart, the sort of like the closes seem to be a little bit more focused up here. Let's move that up there. 1925 actually. So it's around about where we're trading. So I think this is going to be quite a pivotal level between 1915 and 1925. If we close above it on a daily basis, I think that's pretty positive. It's obviously broken this downward trending resistance line, and yeah, looks pretty good really. On the weekly chart, you had this bullish insider army here, and another positive candle last week. But I suppose really we've got to clear the 2000 level to really get excited about this. But that's a way off. So yeah, I think one to watch closely. I'd sort of like above 1930. I'd be trying to sort of like get longs if I wasn't already. Otherwise, just sort of like hold pat on it and I think continue to look to buy dips. It seems to be the real safe haven that everyone's continuing to use. But obviously quite a dollar sort of focused. Oh, we're trading near 93.13 again. That's funny. I keep coming back to that level.
Groundhog Day for you, Steve.
Yeah, a little bit. So yeah, it's that's really the one that's sort of like sticking out. Obviously, well, I mean, silver has had a really good rally as well. Although it's had a little pullback in the last hour or so. I think that's on. If we bring that onto a 4-hour chart again, we can see it probably hasn't sort of like got to the real. Well, yeah, it's just below where I'd say the sort of like real pivot is around 25.50. So testing that, well, it looks pretty positive overall, but not getting too excited just yet. I have to sort of bed myself in for a few days.
Absolutely. Okay, so shall we have a look at the gun to the head stuff then? Just a quick recap last week. Obviously, Steve was off. Whose dog's going crazy?
Not mine.
Okay, so we had a trade on Bitcoin, a long trade on Bitcoin last week, which made 2.23R at the close at 9 o'clock. It did go on to hit target, but not until 3 o'clock in the morning, so we can't count it. And Ian, you were stopped on your dollar CAD call. Further chat about US stimulus, further weakened the US dollar, and there was some CAD data as well, I think that we looked at 1:30. So things didn't quite pan out on that one, but that's the game. Overall, we are still heading in the right direction. We are just over a year old today doing Talking Ball. So in the space of a year, up over 110% in that time. Had you followed all of our calls, risking 1% of your capital on each trade. So overall, looking pretty good. So let's see if we can keep it going, shall we?
Nice.
Who's got a trade this morning?
I'm going to go for that sterling yen, if I may.
Go on
then. Go on in.
Go on in, Sam.
So going short at the market, targeting the measured move. Stop above the swing high. What is the market? Is that right? 55, that'll do. Getting short at 137.55. Stop at 137.87, targeting 135.08, gives me 7.5 R.
That would be nice indeed. Steve, have you got one ready?
Yeah, I suppose I'm looking at FTSE. I'm quite negative on sterling and probably FTSE as a whole at the moment. Got this downward channel on the weekly chart. Looks like we could look for a retest of this 60.75 level. Started off quite positive this morning, so I think we could get a little bit of a run up to that area. But overall, I am bearish of it. But I'll give it a bit of a go this morning. It's sort of like it's just retested the overnight swing low, 59.95. So if I get long here, only looking for really tight one. Getting long at 6,006, 59.86 will be the stop, and 60 is 66 enough? Yeah, 3-1, that'll do. Targeting a move just to the sort of top of that channel, the bearish channel, remember. So overall bearish, but looking for a little bit of a move higher today.
Cool. Okay, good luck. I'm going to take a look at Aussie yen. So opposite side of Ian on yen. This is the daily chart. So trend higher from the lows in March is still pretty good, although we've seen a break of this wedge. So expecting a bit more mixed price action potentially. Really focusing on the intraday charts here. This is the hourly chart, so we've seen arguably a bit of a double bottom take shape there. Breakout, probably more than got on to hit the target there and continuing higher. Very short term, we've got a decent looking trend higher. A little bit of a consolidation taking shape here, and in the last hour or so, we've seen a little bit of a break out of that small consolidation pattern. So I'm going to run with that. Targeting a move up to some resistance that I've highlighted up here at 77.02. Buying at the market, which is 76.32, stop loss at 76.11, which is 3.6R from here. So that is my trade for the day.
Nice.
Not going to say good luck.
So the calendar looks very bare today in terms of economic data. Obviously, we are going to have bits and pieces ongoing. There was some chat overnight that President Xi in China will address Shenzhen this week, with some investors hoping for further reforms that could drive foreign capital inflows and therefore enhance the technology sector. So that could be good for stocks. And on the US stimulus front, President Trump and House Speaker Nancy Pelosi at the moment are bickering with each other and blaming each other for the lack of progress on a new plan to support the economy. And also something interesting I saw out of Goldman Sachs over the weekend, they've put a warning out that the US currency could tumble to lows of 2018 on the rising likelihood of Joe Biden winning the US election. So a bit of a warning on the US dollar there from Goldman Sachs. I know Trump has got a rally going on tonight in Florida, a massive rally. So let's see what sort of measures of social distancing are in place for that. I think that's pretty much it, unless any of you guys have seen anything else. I mean, we're obviously waiting for Boris to speak in the UK.
What time's he on? Do we know?
I haven't been able to find that out, but usually the daily briefings have been around 4. I mean, last time we got the full details around about midday, I think, and then we obviously had the address to the nation, which was later on in the evening. So maybe
Prime Minister's question times, is it?
Is that on today?
I don't know. The PME is expected to make a statement to MPs at around 3:30, announcing the new system. The new system that he's invented to try and confuse everyone.
3-tiered system.
And then at around 6 p.m, Mr. Johnson will host a televised press conference.
Yeah, okay.
Alongside Chris Whitty, CMO, and the Chancellor of the Exchequer, Rishi.
Okay.
So
getting Rishi in to help out, are they?
Yeah, brought in the big gun.
I assume then that will mean that there will be some monetary
support.
Policy action there as a part of what he's going to say today. So that may include something along the lines of anyone that's sort of on the tier 3 complete lockdown, they're going to get some financial support.
Yeah, you'd think so.
Okay.
That sounds like a plan.
Cool. Let's see what happens then. Unless anybody's got anything else, we can wrap it up there and be back tomorrow morning then.
I just heard, saw yesterday Liverpool Council was sort of kicking back a little bit at the threat of this level 3 lockdown, asking for more proof of the reason why it's needed. So I think you're going to get local councils. Yeah, I think you're going to get local councils kicking back a bit.
If you look at the charts of, obviously, last time in March when we saw the huge spike in infections and the deaths and the hospitalizations, they were massive.
Yeah.
But they've flatlined, haven't they?
Yeah, and there's almost a drop as well towards the end of last week. Like I think went from 15,000 one day to like 12 the next, the average of the last 7 days. So that's quite a big drop if you just from one day to another and take it an average. So I don't know whether there's another reason for that. Maybe data not getting to where it should be. But if the data was received on time, then that seems like a significant pullback. So I think that's the problem. You're going to get a lot of people kicking back on this as well.
Yeah,
so that's not going to help.
People are within their rights to demand some sort of proof, aren't they? I suppose.
Yeah. I mean, I think the sort of like the real to get a real understanding of actually what's gone on over the last year, we're going to need a lot more data and a lot more time, and we probably won't really know the answers for a few years, which is a bit disconcerting. But so we're trying to sort of like react sort of like before we have all the data. So, but that's the way things are.
Yes. Yep. All will come out in the wash.
Yeah.
In a few years.
Yeah.
Okay. Let's wrap it up there then, guys.
Excellent.
Yeah. Have a good one.
Have a great day.
Cheers.
Cheers. Bye-bye.
Bye.